Mr. Ian Walker from First Markets with me. Welcome, sir. Welcome to
Thanks very much for having me.
Bullion Bulletin. What is your estimate of the physical demand will remain for this year globally?
Globally, it will come as no surprise, that things haven't been as strong as they have been in previous years. Certainly, from our perspective, what we've seen is a small decline. Certainly in the two key consumers, China, obviously, but specifically India. Q2, for example, recent suggestions have been there was about a 50% drop in consumption for obvious reasons. Q1 was similar. And why that's important for us specifically is that the balance, certainly on an annual perspective for gold, is from a supply and demand perspective is very balanced. So if you're taking out a lot of consumption from the Indian market, suddenly we're looking at a bit of a different story. Now, physical demand has obviously only a limited impact on the international price, but if you're taking out 50% from Q2, not far off that in Q1, where does that leave us on the end of the year? Certainly for predictions from a jewelry consumption perspective, that's proving very interesting for us.
This quarter also, I don't think demand will improve. So maybe the fourth quarter with a good monsoon and the other factors like festivals and others, demand might return.
Absolutely. The rains are obviously forecasted to be better than they have been for the last 2 years. We looked at 2 years of deficient rains. But there's two elements to that. There was a World Gold Council report out in the last few days that is saying that H2 will be a lot better for India, and not for obvious reasons, with the festival season. But some other contacts of ours have been sort of suggesting that from the last 2 years of deficient rains, we've seen a lot of farmers accumulate large amounts of debt, and therefore the good rains and therefore better yields will only result in sort of paying off those debts as opposed to resulting in direct increases in gold consumption. There are obviously those that believe, though, that the better rains and the better yields will result in better consumption. I think it's really important from a global perspective, not just a physical perspective, that Indian consumption this year does achieve the forecast that it widely has, 600 to 700 tons. These are huge amounts of gold when you consider that annual supply and demand balance. But yeah, it's looking better for H2, certainly with the better rains. These discounts, these record discounts, obviously, that where we are at the moment, $30, $40. This, I'm sure, will start to get a little bit better from a premium perspective over the next couple of months. But it's key, obviously, that these rains do achieve the forecast that they have been, especially considering 2 years now of drought.
In your company, Fast Markets, what you are actually looking at Indian market? You are targeting something. From your business perspective,
what we do is we provide a real-time pricing and news platform, very specifically for the metals industry, from primarily base metals, but we do a lot on precious as well. Now, obviously, the international price has been affected largely by things like Brexit and obviously economic uncertainty and various other aspects of US interest rates. But ultimately, the supply and demand balance has been so balanced for so long that for us, what's key about being at a conference like this is being amongst the people that can, contribute to a huge chunk of that annual demand. So what we try to do is we try to give some transparency to what is often, not a particularly transparent market in China or in India specifically, being able to tell the story from the ground upwards. And that includes things like, premiums and discounts on kilobar trading, a huge part of Asian gold consumption. But we also can look at things from an outside perspective and what can influence physical demand, specifically, quite volatile factors like price. Higher prices can obviously result in lower consumption and vice versa. But our job is to try and bring some transparency to that.
What is your take on the price? How price will shape for the rest of the year? Are you expecting price will shoot up?
Well, personally, I couldn't give an estimate or a forecast, but there are a couple of quite key elements, and I've spoken about one in obviously Indian consumption for the year. Chinese consumption, I hope will get a little bit better. Jewelry consumption has been a little bit weak, but the key factors are, now that we've gone past Brexit, is whether or not this uncertainty lingers and what that results in over the next few months. Obviously, it looks like now we might be looking at another US interest rate rise. and that will have impacts, of course, across the scale, not just on the physical markets, but higher up the chain with institutional investment. I would certainly say that there is that lingering uncertainty in the market, which I'm sure you feel from not just events like this, but in general across the year. And what that results in, certainly for gold's credentials, is what will be evident maybe over the next 6 months as we get a little bit better, a better picture of what's going to happen with US interest rates.
How are you enjoying this conference so far?
I think it's a really interesting mix of people. And it's my first time at this conference, which is just that is having the likes of jewelry companies around, people that aren't looking at things certainly from talking about like what we were just talking about with things like US interest rates, Brexit, people who are actually just looking at things from quite a sort of narrow perspective, and that ultimately is is an insight that you don't often get, and that's what's really interesting about this conference. Certainly from me as a Londoner, as a European who most of the time is attending conferences in Europe where you get a lot of huge investment companies involved, you don't get as much of a good picture as you do at something like this. So,
thank you, Mr. Walker.
No,
nice
thank
to
you.
talk to you.